Hey, it's Patti Scharf, CPA and co-founder of Catching Clouds, the leader in e-commerce accounting. Today we're going to talk about internal control procedures. I know it sounds like a really exciting topic, but actually this is where all the really good stories are. So make sure you stick around to the end. I'll give you some more insight into other ways you can safeguard your business. Okay, so let's get started. There are really 5 key components to having good internal controls. Let's get started with the first one, control environment. So when we're talking about control environment, we are talking about just the nature of the environment of your business. Are you ethical? Do you expect your people to be ethical? Are you doing background checks on your people? Do you have a board of directors who are overseeing things and making sure things are being done right? Are you including support for all of your transactions? Things like that. Do you have policies and procedures in place? If you have a good, solid control environment, then it's going to be harder for bad stuff to happen, because if everybody's kind of already on the up and up and doing things the right way, criminals don't really want to be a part of that sort of thing. So number one, control environment. The second thing is risk assessment. So now you're surrounded by the right people doing the right stuff, and you need to take a look around and go, okay, what could really harm my business? It might be internal threats, it might be external threats. What things are not well protected? So some good examples are, let's say you are doing your accounting on desktop software and you live on the San Andreas fault line and California decides to start falling into the ocean. Maybe you don't have backups, or you do, but the backups are in the same city as you are. So you just lost all of the paperwork, everything for your business. If you're keeping your accounting in the cloud, then it doesn't really matter what happens to your office. You're still going to have that information protected. There are also some risks, arguably, about having your information in the cloud. So you want to do things to back up that information also, or have some type of security around it. Just make sure that the tools that you're using, they have security in place, they have backups that are happening too. Maybe some of your threats are internal and you have passwords set up to protect your accounting system, but you keep your password underneath your keyboard. Yeah, don't do that. That's not very safe. So just take a look around what things could be more protected, and then think about the actions that you can take to safeguard your assets and your business. The third component of internal controls is control activities. Now, this is what most people think of when they are thinking of internal controls. It's actually the actions that take place to help protect your business. So one of those is redundant systems. I talked about that before, where if you have a computer system that's really critical to your business, make sure you back it up. And so that you have it in 2 places, so if something happens to one of them, you're still protected and you can get that information back working again. Okay, here's a topic that a lot of accountants like to talk about, and that's segregation of duties. This is really kind of hard for small businesses because they usually don't have very many people in the mix, but do the best you can. So here's an example. You don't want the person who is taking the checks to the bank to be the same person who's recording those deposits, because what happens, you get a batch of checks for, let's say, $10,000, and you're the bookkeeper. You record 8,000, you deposit 10, you write yourself a check for $2,000, or you take $2,000 out of the bank. So the net deposit of 8,000 actually matches, okay, done. And you've just lost $2,000. So you want to be careful of that. I would especially be careful of giving the bookkeepers control, the ability to spend your money. You just want to be really careful of that sort of thing. So split up the operational duties from the accounting duties. Another example is proper authorization of transactions. So one of the best examples I have is, I know a lot of businesses who they're really busy and they want like the early payment discount, so they'll give their credit card to their suppliers so that they can charge them really fast, and they'll just have their credit card on account with them. You don't want them to be able to charge up your card willy-nilly. So either you need to be paying really close attention to how that's being used and jump all over them if there's unauthorized use, or better yet, do not give out your credit card information. And I know it takes a little bit of extra time or effort to monitor that kind of that kind of transaction, but it's really much better than being ripped off without you knowing it. Another control activity is actual physical security. So let's say you are doing all the right things. You have a purchase order, you've received the product, yep, that all matches up. You get an invoice, that matches up. Yay, I did everything right and I spent my money on that product. It's all good. Let me just put it in this warehouse, and then inventory mysteriously disappears from your warehouse. So invest in things like security systems, pay attention to the actual physical protection of your assets. Another good example of that is limiting bank access to people who don't need to be spending the money. They just need to look at what's going on in your account. We ask this of our clients all the time, to give us limited bank access so that we can view transactions, but we can't actually make transactions. That's a really important way to protect your assets. The fourth component is information and communication. So the best example I have of this is actually an accounting system. So if you can trust that all the information is going into your accounting system accurately, then the reports that are coming out can tell you a lot about your business. Maybe you see returns going up and up and up, but in reality, when you're paying attention to operations, that doesn't really reflect what's going on. So maybe somebody in your business is giving out credits to invoices when they really shouldn't be. Or if you are looking at inventory and it's not as high as it's supposed to be, maybe something else is going on there. So I would say educate yourself, make sure you know how to read financial statements, and then that information that you're getting from your accounting system will really help you out in identifying potential problem areas. The fifth component is monitoring. I think this is really important and often overlooked. People will set up a system and they're like, yay, I am so protected. But then they don't follow up on the system to know if it's working or not. So one of the best ways to do this is take physical inventory counts of your inventory, at least annually, but I would recommend quarterly or better yet, monthly. Then you can kind of see, oh, good, this is working, this is not working. Oh wait, why are my numbers so far off? So that's a really good way to make sure that things are staying safe and protected just like you want. Okay, I hope you liked this video. If you want even more information, more examples of how you can protect your business, please follow the link down below to our blog post on internal control procedures, and we've got some more stories and things for you. If you like this video, please like, share, comment, and if you haven't already, please subscribe, and we'll catch you later.